Welcome to Bank Freedom TV, episode number 3. I'm Victor Arocho, a cash flow banking specialist. I truly believe that most people really have no idea how life insurance works, especially today. This is not your old life insurance where your grandparents, your parents, that's it. You got life insurance and it was only as good because you died. Today, they have living benefits. There's a lot of benefits to having life insurance. Most people talk about life insurance. A lot of people don't take action to get life insurance. I am a licensed insurance agent, and my job here and what I want to do is be able to provide financial education to utilize high paying, high dividend, whole life policies that are custom designed to generate and accelerate your cash as fast as possible. Now, I want to be crystal clear. Utilizing infinite banking, insurance benefit concept, your family bank, bank on yourself. This is not an investment strategy. It is a saving strategy. Okay, we're taking back the banking functions. Today, you put money into a bank, then you pay your bills out of that bank and you start the process all over again. Maybe you save a little bit of money. Maybe you don't save a little bit of money. You pay interest to other people. You pay a lot of taxes when if you're lucky enough to get an interest rate in your bank, you're going to pay capital gains. So I just want to start educating you on how to utilize these cash acceleration policies. And there's several companies that we work with, and there's a lot of great companies out there, and we'll be reviewing those in later episodes. But I just want to give you an idea of how it works. Money flows into your account, money flows out of the account to pay bills, right? And then we're in that save, spend mode, or we're in that, let me borrow, pay it off, borrow again, pay it off. And every time you're borrowing, you're paying someone else that interest. Well, how would you like to be the bank and pay yourself that interest? Let me give you a quick example, particularly in the business aspect or in the personal aspect. If you're buying a car, if you're buying a piece of equipment, okay, let's say that you have cash value, and then they could range from 20,000 to 100,000. It really depends on the cash value and how much you want to be able to fund what I call your own policy, which can act like a banking or saving strategy. All right. So let's say that you have 100,000, just to make round numbers. You can have 20,000, 30,000. We've written policies that start off by funding a bank anywhere from $150, $200 up to $3,000, $4,000, and people dumping $40,000 or $50,000 in these policies. So it can range. If you can save $10 a month, that's $300. $300, you can be funding your own bank and you'll see it generating cash. And then you want to utilize it as your own bank. So let's say you have $100,000 in cash value inside of your policy. Now, in most insurance companies, and the ones that we particularly use, they guarantee you a 4% interest rate. And let's say you take out a loan for $30,000 to purchase an automobile, to purchase a piece of equipment. And your interest is at 5%. So what happens is you're not borrowing from your policy. They are collateralizing your death benefit, and they're allowing you to use how much cash value you have in your policy. So you borrow $30,000 at a 5% simple interest rate. You go and purchase the vehicle. By taking that money out as a loan, the beauty about having your own cash acceleration, your own banking type policy, your policy continues to earn 4% on that $100,000 as if that $30,000 was never taken out of your account. To try doing that in the bank. Now let's look at $30,000 at 5%. Now we have, most of our companies are like 4.73. They're less than 5%, but I just want to give you the example for easy purposes at 5%. You borrow the money from the surplus of the company, you take the loan, and you have a 15% you owe on interest. Their earnings of your cash recaptured from that loan interest paid is $4,000 earned, because on the $100,000, you're getting a 4% return guaranteed. So you've earned $4,000. You took out $30,000, so you're paying back $1,500 in interest. Your net is $2,500. So though you borrow $30,000, you're still ahead of $2,500. And where's the interest you're really paying? The beauty about that is the companies usually assume that when you take out a loan, you're not going to pay that off in the first year. So they are charging you the interest as if you didn't pay it. You make one payment within the year, you're getting credited back part of that $1,500. I give you an example of one of my clients. They borrowed, let's make it easy, they borrowed $1,600. Okay, at 5% interest. That was 160. Okay, so $80 in interest they had to pay, say it in at 5%. They made one payment and they immediately got a $7 refund. That dropped their interest rate from 4.63 down to 4.63, about 4.23. They gained their interest rate dropped half an insurance point. Okay, so this is how you're able to utilize these functions by funding your bank, borrow money from that bank, paying off the items that you need to pay, and then pay yourself back, no different than in your own bank account. You're putting money into your bank account, you're taking that money out, you're buying something, and then you're just replenishing the money. The problem is when you do that, when you take the money out of your bank account, you're only earning interest based on what you have in your bank account minus the money you took out. And a high paying whole life cash customized policy, you continue to earn your interest as if you've never taken the money out. I can't imagine a better situation than that. There's some great companies out there that you can use. We happen to use 3 great companies: Mutual Trust Life Insurance Company, we use Foresters Insurance Company, and we use Lafayette Insurance Company and National Life Group. They've all been around for over 100 years, and each one of them have been paying dividends for 60 to 100 years straight. Now, the dividends aren't guaranteed, but your interest is guaranteed. So imagine having something that's guaranteed interest where you're storing your money in a bank, particularly a business. You have your money in a bank account, or you have money that you have in security for a rainy day fund. Well, have it earning interest. And when you borrow it and you have to pay it back, replenish it, and you're consistently earning your money, your 4%, plus you're earning dividends. Again, my name is Victor Arocho. I am a cash flow banking specialist. I'm a licensed insurance agent in several states. We customize policies, but I just want to educate you on how these high accelerated cash policies work. There's many people out there that will give you more information. Nelson Nash is one of the creators of infinite banking. He has an excellent book, Bank on Yourself. I will post in this video other books that you can read. There's some great podcasts, and there's some great YouTube channels like Chris Nagel that I subscribe to, that I continually learn. So I want to be able to continually educate as many people as possible and start stopping the gap between the wealthy and the middle class. Thank you, Victor Arocho. Episode number 3, Bank Freedom TV. Hope to hear from you soon. Please, any questions, or how would you like to hear this better? How would you like to get educated better? You can go to my website, victorarocho.com, VACTORAROCHO.com, to get more information and get some you can also get some documents to help yourself out from a spending planner to see how you can look and see how you'll be able to pay off debts. One thing that we're able to do, and a lot of these policies, they will help you get out of debt faster than you ever imagined possible. And they will also help you generate and create a higher business valuation for your company. Thank you. My name is Victor Arocho. God bless and peace.